my wife saw insurance things on the news, and I told her, I was like, it's like Voldemort. We don't say the name.
It's terrible.
I don't rock the boat.
Yeah,
We don't
for
talk
sure.
about Bruno.
No,
Yeah, we don't
seriously.
talk about Bruno.
Like
Welcome to episode 8 of the Florida Real Estate Life podcast. We have with us today Lyndsay King of Insurance Professionals of Brevard and two of my colleagues from Denovo Realty, Joel Ludlow and Elliott Grozan. One quick note, I've switched brokerages. I'm with Denovo Realty now.
Welcome, Peter.
Thank you.
Yay.
welcome.
So it's 2023. There's a lot of problems with insuring homes. We're running into it as realtors. So we figured let's talk to the expert. What do you see as one of the biggest problems right now in 2023 when it comes to getting insurance for a home?
Insurance is really tough right now. A lot of the companies are changing their guidelines. So they've just tightened up a lot. They used to accept older homes. Now a lot of our companies are only accepting homes 10 years old and newer. They're tightening up their roof guidelines. You used to even be able to get a contract on a roof and say, okay, we'll get it at closing. We'll put it on after the fact. They would make exceptions. They're not making any of those exceptions. And that's just because the market is saturated. We've had so many people pull out of Florida that it's saturating the other companies. So they're having to tighten their guidelines because they just can't write as many policies because they just are loaded with them already.
Sure. So I saw recently that Farmers pulled out, and now basically everybody's using Citizens. Is there any private companies left?
Yeah, there's a lot of private companies left. They're just hard to write with.
Okay.
We have maybe 30 that we used to write with and that we're appointed with, and I'd say right now we're writing with 10-ish.
Wow.
So some of those companies have pulled out of Florida. Some are not writing new business. But like I said, the ones that are writing, those guidelines are just really tough. So that's why a lot are moving towards Citizens. So not only price point, but just because they don't qualify for the guidelines of other companies.
Right. So I know Joel and Elliott do a lot of business beachside. Elliott, what are some problems you may have seen trying to get a deal done?
I just closed, luckily, on a townhome up in Cape Canaveral. I was telling you, Lindsay, the roof was 9 years old, torched down. I guess they could do it with peel and stick now, the new roofs. But the inspector and a separate roof company came out and gave it 5-year life expectancy, and they still had to replace it. But you said usually that's not the case. If they have a stamp of approval of 5 years plus, should be good to go.
Yeah, so Citizens is where people go when everyone else won't take them or everyone else's premium is super high. It's the government program, basically. And with the roofs, if you get a wind mitigation report, there's a section on there with the roof, and it's useful remaining years. And if that says 5 years of life left remaining, Citizens should, and in their guidelines says that they will accept that policy. Now the next year they will non-renew because now you're under the 5 years. So you're basically only getting 1 year of insurance then, but you're buying yourself a year.
Could this be something that falls back on the lender, that they may not want to?
Not necessarily on
complete
the
the
lender.
loan, or no?
No, I haven't seen that. As long
Okay.
as they're getting the insurance at
Yep.
closing, then I've seen
Everybody
that the
wants
lenders
to
are
see
fine.
it through. Yeah.
That situation, it seems like maybe the agent had the incorrect information. Now, granted, I don't know anything about what it could have been a flat roof, and flat roofs have different years, but ultimately, if you said there's 5 years left of life, that should have been fine. So I think that might have been maybe an agent error, and that's super important too. A lot of these agents, all of the agents have different companies they write with.
Yeah.
All of the companies have different guidelines. So some agents may have companies that all have tighter guidelines, whereas another agent might have other companies that might have accepted it with an older roof.
Sure.
So it's important to know whether they're just kind of giving you a blanket statement of, okay, well, most of our companies say 10 years, so we're just going to say that, or if they're giving you the actual guidelines of all the companies across the board.
And what are you seeing for the different types of roofs? Tile, asphalt shingle, metal. What are these insurers given for life expectancy now? Because that's changed, correct?
Yes. Well, yes, it's changed. Each company, I mean, there's one company, I can't think of which one it is, and I don't think that I'd name them regardless, but
Yeah.
there's a company out there that it's either 5 or 8 years left of life on a shingle roof, which is insane. That's basically a brand new roof. A lot of them say 10, most of them are 15 for shingle.
Okay.
But again, it's got to have most of the time it's got to have the 5 years left of life, because if you're at 15, then next year it's going to non-renew. Tile is a little bit longer. Tile and metal are usually 30 years, but some companies just do a blanket statement. We're going to take roofs that are 15 years old, period.
So if a homeowner's shopping, they're going to put on a new metal roof, and they're between a 30-year metal and a 50-year metal, just go with the 30 because they're going to have to replace it anyway.
We actually have that question quite a bit. You know, there's a difference between the roofing companies. This is a lifetime shingle or a lifetime tile roof, or this is a 50-year tile roof. That's talking about what their work, their scope of work. So they've put the roof on and they can insure that roof for 50 years if there's damage to it or whatever. But that has no bearing on the insurance guidelines. So even if it says 50-year tile or metal, 30 years is, from an insurance standpoint, how long that's going to last.
Good. And then another question, Joel and I were talking about this earlier, is I guess a lot of notices just went out to citizens, customers. And if a private insurer can insure the property and they're not more than 20%, they have to go with the private insurer now?
Yes. So that's actually always been a rule to write with citizens. You can only write with citizens if the private policy is coming in 20% higher than the citizen's premium.
Okay.
They have really tightened that up now, really tightened it up. We have to submit 2 and sometimes 3 documents to show a comparative rater on our system that there's no other companies. We have to show, if there's a non-renewal, that the non-renewal, we have to submit that. If the premium increase is higher, there are
Wow.
It's almost, Citizens is tightening their guidelines because they have to.
Yeah.
They're just so saturated too. So it's almost like when we're writing a citizens policy with your clients, prepare, if that's where we're going with, prepare that there is a lot of documentation that we have to get. And we're going to have a lot more information we have to gather. Citizens is one of the few that requires us to submit Social Security numbers with. And one thing that I think a lot of people don't realize on a citizens policy, and I think this is extremely important, is that there is a surcharge that they can implement at any time. And it's up to 45% of your premium. And that is to keep them financially stable.
Right.
Because they can't pull out. So all of the other companies, if they go on, they can go under. Citizens can't. So if there's an extremely active hurricane season, then they can charge up to that 45%. Doesn't mean that it's 0 or 45.
Is that just for the year, or once they charge that,
It's
sticks?
a one-time.
Okay.
It's a one-time. It's a one-time fee.
Okay.
And
It's to say, hey, we've had a lot of expenses.
right,
We need to charge you.
If they've paid out a ton of money,
Right.
then they have the right to kind of recoup some of that money by using that.
I was going to ask this later, but might as well go with it now since we just brought it up. So one of the reasons why there's such high premiums in Florida is the hurricanes. But what I've never understood is, I come from New Jersey, and the roofs up there take a beating with the nor'easters and hailstorms and all that stuff. Is it just fraud? Are there people making claims that they shouldn't be making, and that's rampant?
Yeah. So there is a lot of fraud. The roofers that would come around and
Sure.
knock at your door, hey, I can get you a new roof. That's a huge part of it. So a lot of the fraud, it takes time for that to trickle down. So when we had the hailstorms, I was 2017, and we just recently had more.
Yeah,
we had a lot of hail recently. Those claims will start coming in, but then it's also when the reinsurance carriers, they have their premiums for the insurance companies. So yeah, fraud is a huge issue. And, I'm one of the ones that I know everybody has to make their own money and, feed their families. But when we have people come to the door, I'm like, go away, I'm an insurance person. I don't want solar, and I don't want, and I don't want a new roof. I'm fine. Because that is a lot of the problem. There's a lot more litigation fees and things like that. People are fighting claims more.
Sure.
And so the litigation is a huge cost too.
Okay. Joel, one thing I've noticed, and I know you have too, and I want to hear your opinion on this, is So now having a home inspection and a clean wind mitt and clean 4-point are more important than ever. Buyers are actually getting more concessions than they used to. They're saying the seller knows that if they don't fix these things, they're not going to sell the house.
Yeah, I think the buyers have more power with the sellers at the moment, just because the sellers firsthand know how tough it is to get insurance. The biggest thing I've seen recently is over the last year is sellers contacting me saying, hey, my premium just went way up. And they're asking me for my insurance people to go get quotes. And in one case, I was just telling Ellie about it. It was like more than double. So, yeah, I think that people on the sell side understand more that how tough it is to get insurance and how strict the guidelines are. So that does give the buyers a little bit more power. So.
Yeah, and we're seeing a lot more realtors coming in asking for quotes on the front end because it's such a huge expense. Whereas before it was, we could get policies under $1,000. Let's tack that on to the mortgage. But now it affects your PMI. When you're talking about a $10,000 policy, a $35,000 policy, it's insane. Yeah. So you have to factor that in because it's affecting the sale of homes, and it's also affecting people who are already in homes it's drawing them out of their homes. They're having to go somewhere else because they had, $1,200 policy that's now $8. Right. I mean, that's an extreme jump, but over the years it keeps increasing, and and then you have to have insurance if you got a mortgage. So what do you do?
I think it's smart to get that quote up front though, because I know a lot of mortgage guys have like that estimator.
Yep.
This is more in the past, but it makes more sense now to get something more accurate, because I've had buyers that, we get the actual quotes, and they're like, wow, this is higher than I thought it was going to be. So, and it affects your payment,
right?
And right now I feel like people are more payment conscious than ever.
Right.
So.
And the mortgage companies, they used to estimate that your lender would estimate the insurance into what that monthly number would be, but those numbers have gone up exponentially. So a lot of times I don't know if those mortgage companies are estimating correctly. Right. So it's better for the lender to come to us and say, hey, let's get an idea. And, it doesn't even have to be on the dot completely accurate.
So you'll actually have lenders come straight to you as well? That's smart.
Yeah. And because you don't want to give them that
estimated
number.
Because those guys, I mean, they don't want to be the reason why the deal doesn't go through. So.
Yeah, we've saved a couple deals from falling through recently that I was telling you guys earlier that there was a couple higher value homes, 2-3 million. They had other quotes for $35,000, and they're like, I'm not paying that. Right. I'm not paying that. If that's the case, then this is their dream home. So they were so on the fence. They really wanted this house. So they came to me. I worked real hard on this policy. They had been given some incorrect information on the roof, but that quote came in at $35,000. And when we shopped it around, we were able to get it closer to $17,000, $18,000, and then possibly even lower when they put a hurricane impact garage door on there. Okay. So, it's really important to find an agent that'll take the time to look at your policy, because that's wonderful for that insurance agency. A $35,000 premium, we want to see that coming into our pockets basically, but there's so many other options there. And I think like I was saying, a lot of the agents have just kind of this general, all right, if it has 15 years of life, or if the roof is 15, we're just not going to take it. But there's things you can do, and the higher value homes are harder too, because you can't write it with Citizens. Right. Citizens only goes up to $650,000 for the dwelling amount. Mm-hmm. And then if you're in a certain amount of that, a certain percentage of that premium, next year they're going to drop you. Right. Mm-hmm. And I've seen it happen I've had 2 in the last year that they got bumped out of Citizens. They were paying, one was paying $7,000, and then it bumped up to 14 when they got kicked out of Citizens. And then the other was paying 3, and it bumped up to 8 when they got kicked out of Citizens. Jeez.
Yeah,
because huge jumps.
You have a mortgage, and they require you to have insurance, so you don't have a choice.
Right.
Yeah.
But correct me if I'm wrong, Citizens is financially sound. I mean, they insure 10% of the homes in Florida, 1.2 million, and they have $6.5 billion in reserves.
It's the government, but yeah, they're not going to go under.
Right.
So that is one thing that you can be insured with Citizens, is that your policy is not going to just be canceled. Now they are doing depopulation right now, where they're going in and basically giving you the option of going with another company. And they want us to present these offers to the clients. And I mean, a lot of the clients are saying, no, we're not going to leave because these policies, my policy with Citizens is 4, and you're giving me a private one for 6, 8. And that's just the nature of it with it being Citizens. So they're choosing not to be bumped out. But then if Citizens does find, or we find that there is a policy that's within that 20%, they bump it right out because they're trying to get people out of it.
And that's the notices that are going out currently. Okay.
Yeah. And it's freaking a lot of people out because they don't know what's happening. And Citizens is extremely saturated. So, I mean, in a way, this does need to happen because everyone, if you're appointed with Citizens, everybody's writing a lot of policies with Citizens. And it's not, you don't want to be with Citizens. We want to write you somewhere else. That's supposed to be the last resort, but it just goes to show how terrible insurance is right now if the last resort is where everyone's going.
Right.
It's terrible.
Lyndsay, I see, this is a major problem I see in Florida, and I'm sure you do too. There's a lot of cash. There's a lot of cash bought properties in the last few years, and a lot of people are taking the risk and not getting insurance. If you own it free and clear, can you kind of pick and choose the coverages you want, or? Yeah,
so it's funny you say that. I just had somebody come in last week who had a policy with Frontline, and Frontline's a great company. We write with Frontline all the time, and good client. There was nothing about the policy itself or us that they, didn't want to work with. It's just they decided they wanted self-insured because they were tired of the rate increases. And we kind of talked over options, and there are different types of policies. So a typical HO3 policy is going to give you full coverage. But there's, DP1 policies, DP3 policies. There's different types of policies that you can get. You can get just liability. There's different options, and a DP1 is going to cover very minimal things. And we call it wharves, and it's basically a named peril. So in other policies, it says what they won't cover, and this policy says what it will cover. So you can see how that's kind of limiting the scope right away, and there's only, I think, 5 things that they cover. So it's much more basic. And you can do that, and so some people are choosing just to have minimal. And even within your HO3 policy, I've worked a policy for someone before that we just stripped it bare bones. So we took personal property off of it. We took other structures off of it. And so there's things that you can do and wiggle room within your policy if you really talk to your agent and say, okay, I just want the dwelling itself covered. And, there's things you can do to your house, too, that can bring your insurance down a ton, especially the roof and your wind mitigation, the windows. I've seen one policy that went from $9,000 to $3,000 with no wind mitigation credits to full wind mitigation credits. So you can see how that just closes that gap. You might be spending a couple grand up front on windows and a new garage door or a skylight or, something dumb like that, but it can save you year to year a ton on your insurance policy.
Sure.
I have a question for you, and it might be a basic question, but I get this asked a lot, and you're probably the best person to explain it, is other structures on the policy.
Yes, other structures is a little complicated. So you're talking blinds, appliances, you're talking obviously your TVs, your couches, things like that. But a lot of people don't realize that appliances are usually put in there. And a lot of the average default when you're writing a policy, most of the policies will default to 50% of your dwelling amount. So if your dwelling is $200,000, your other structures are going to be $100,000. Most companies you can lower that to 25% is usually the lowest, or some companies will allow you to exclude it altogether. We recommend usually that 25% is usually plenty. That's what we found, is that most people are like, I don't need 50%.
Does that make a big difference if you take it down to that number for your premium?
Yeah, I mean, it does. That's a lot of coverage. So bringing that down brings the premium down quite a bit. It's probably one of the bigger things that you can take a big jump when you're changing coverage. And the other thing is replacement cost. So some people, and a lot of these like direct, if you go online and Kin and stuff and you put in your information, they'll kick back these numbers, and they have like little things in there that you wouldn't know if you're the average Joe looking at this policy. So they'll bump it and say that its actual cash value is basically garage sale value. If you bought your couch for $2,000 and you sell it at a garage sale, you're going to get $100 for it. Whereas replacement cost, they're going to give you what it would take to buy this exact couch today at XYZ furniture store. Okay. And that's a huge thing that can drive prices down on the premium.
Okay. That's good to know.
Yep.
It also pays to shop around because, somebody might ask another local insured for a policy, and they'll quote them this stuff that's got stuff loaded in there that they don't even need. I remember one time I got something, and there was like identity theft protection in there. I was like, really? So that's why I always suggest using somebody I trust, somebody I know, somebody I would refer business to.
Right, because it's a lot of it, like I said, if you're the average Joe looking at this policy, before I got in the business, I would have looked and been like, okay, maybe I do need all of this.
Right.
But a lot of it you don't need. A lot of it you can change around. And unfortunately, there are some agents out there who will, jack up the dwelling amount and have you overinsured. And, but to be in that sweet spot where you have the right coverage is a huge deal. And to have an agent that can talk you through it and say, yeah, let's get this premium down, instead of just thinking like, let's keep it high because it's going to, pay my bills. So honesty is a really big thing in our industry. And, we have a really high retention rate. We're in like the 90% for our retention rate because our customer service is really good. But yeah, we will absolutely, there's been times where we've had people come in and say, all right, this is what I'm looking for. And we tell them, all right, I can't help you here, but let's find you who can help you or how I can help you. Yeah. Or, if maybe I can't help them on their auto, we send them in the right direction to get their premium lower. But then they come back to us for their home because they know we're not going to screw them over with their rates,
Yeah.
Right. Well, if you're honest, then you know who the other honest people are, so you guys can bounce back and forth.
Right.
So.
And I mean, I've met tons of people in the insurance industry, and we all get along really well. And some people have companies that we don't have, and some people have companies that have different guidelines that maybe, okay, I can't get this house insured, but I know this person, and I know they've got this company. So it's really important to not be super selfish and know. To really help my customers is to have a wide scope and a wide network of people,
I got a question for you. Mm-hmm. Explain the difference. All right, you're shopping auto insurance. There's a bunch of things that could affect your premium. Credit score, driving history with citations, accidents. If you're shopping homeowners, is it just simply the house or previous claims? What else could affect the
Oh, that is a really good question. So there is a credit score agency, LexisNexis. They're the ones who do all the scoring.
Okay.
But claims are huge.
Yeah.
They follow the person and the home. So I've seen
Forever?
Oh, really?
for usually between 3 and 5 years.
Interesting.
Both. So I've seen some where the person's like, all right, I had no idea there was a claim. The seller didn't disclose that there was a claim 2 years ago. Mm-hmm. I write the policy and it pops up with the address.
And that affects their insurance.
And that affects their insurance. Wow. And
I actually didn't know that.
Yeah.
Wow.
And then this is mind blowing. So some companies will, and it's a very limited number of claims that you can make. A lot of companies say if there's one or more water claim, can't write it.
Oh,
one.
Really?
One. I had that with my $35,000, and we cut it down. She had a claim on a house in Maine.
Ugh.
In her husband's name.
Ugh.
And it pulled it. And so the company that I wanted to write it with, that I got it for 13 instead of 35, couldn't write it with them.
So from another state followed them down here?
Wow.
Yep. Followed them down. One water claim.
That's wild.
And they do fall off eventually. But,
Yeah.
I had another client the other day, and, I was on vacation, and I'm out on the boat, and she texted me. And I got to her, like, within the hour. But she said, I think my water heater's leaking. And by the time I got to the phone, she had put a claim in. And, it was within an hour.
That's like a really easy thing.
It was within an hour. And I was like, she's super young, super, super sweet girl. And I'm like, listen, we want to not put claims in because it can affect you moving forward. Right. So we usually say if it's close to that deductible and you can swing it, don't file a claim.
Well, I was telling Elliott earlier, like my wife saw insurance things on the news, and I told her, I was like, it's like Voldemort. We don't say the name.
It's terrible.
I don't rock the boat.
Yeah,
We don't
for
talk
sure.
about Bruno.
No,
Yeah, we
seriously.
don't talk about Bruno.
Like I go, we're doing good in the insurance department. They haven't messed with us, so
Yeah.
let's not mess with them. So
Don't poke the bear.
yeah,
Do not poke the
something
bear.
as simple as a water heater. I understand, like, we've been in the business, but not
Right.
everybody knows that. But like,
Especially if you're a new home buyer, you're like, this is what I
Yeah,
pay for
yeah.
insurance for. And that thought process makes sense. I'm paying for insurance. Why would I not put these claims in?
Right.
But insurance is really meant to be for catastrophic damage.
yeah.
And I think people forget that. They're like, oh, okay, well, I'll pay $3,000. You know, my deductible's $2,000 and this is $3,000. So, you know, it's $1,000.
right.
You really
the
should
long
think
run,
in the
yeah.
long run, it could cost you, you know, and
whenever
really
I need anything
sucks.
done, I just have Elliott come over.
Mr. Fix-It.
He is very
Wreck-It-
handy.
Is he Mr. Fix-It or Wreck-It Ralph?
No, he's Fix It.
Does he
He's a
come in
Fix-It
and mess?
guy.
I say I'd be Wreck-It
Thanks,
Ralph.
guys.
I'm Wreck-It Ralph.
You're
I'd like
Wreck-It
to say
Ralph?
that you look really.
I'm not allowed to
dreamy
use
today.
power tools.
Yeah.
I'm like the brothers and
Thanks, Joel.
stepbrothers.
Oh
really
man,
No power tools.
I like to learn new things. So I've learned to kind of do. I like to paint, and I learned how to do drywall recently. Actually, my dog. I have a Great Dane, and my dog, when we had two dogs, was running around the house, and her head went through the wall.
Nice.
And I was able to fix the drywall, and I was so proud of that.
That's awesome.
Like taking pictures and posting them, like, look at what I did.
Yeah.
That's
So
all
how'd you
neat.
figure it out? Like, I'm a big YouTube video guy.
Oh, I had a friend that helped me.
Okay.
But I wanted-
So you learn for the future. So
Yeah. Now I can totally do it by
That's awesome.
myself.
Yeah.
And I mean, there's some things that I've fixed that are not like the best. I
Well,
think at one point I took like a paper plate when there was a hole and like put the paper plate behind it, and then, so that was not the right way
I had
to do
this
it.
really recently. This was like just a week and a half ago. My spigot outside, like it was leaking from the knob, and it's threaded into the wall. And I was like, I could totally do that.
Yeah.
And then, but I was like, I feel like I'll make it worse. So I called the plumber over, and I was like hovering over them. And I was like, guys, I'm not hovering. I just want to see if I
Learn.
could do this in the future. And it's kind of like, I saw
Yeah.
him do it, not like that.
Yeah.
And I was like, I could definitely do that next time. And they were like, here's
That's good.
Yeah.
Like
$125.
4 months ago, I sold a property in Indian Harbor Beach, and day of closing, the dryer duct was kind of separated from the roof. So I shimmied myself up in the attic, and I was balancing on 2 trusses, and I got it placed, and I slipped and fell through their drywall, their ceiling.
Oh,
I
no.
go, my bad.
That's on me. That's on me. I'm a single mom, so like learning to do all of that stuff myself is like extra prideful now.
Yeah.
Like I don't need a man to do this. I can
Right.
do it myself.
Yeah.
You know, so there's been quite a few things that I've learned, like how to vacuum out the AC when there's a leak in the AC.
yeah.
Like I never knew to put the bleach in the drain, and you're supposed to
I
switch.
use vinegar.
You're supposed to use
bleach.
vinegar. Well, they
use
say
bleach.
you're supposed to use bleach like every 4th time.
I just don't like bleach.
You know?
I love bleach. See, I'm
The
super.
smell makes me sick.
The clean smells, I just
I
love.
love the
so.
smell of vinegar, though.
Really? I
Vinegar
would
and
think-
baking soda.
I
I
like
use that
them
a
both.
You
lot.
like a good white vinegar
So
or
you
apple
like
cider?
the
or what?
volcanoes?
I'm
You like them all?
vinegars.
All vinegars.
Balsamic?
Yes.
Yes.
Nice glaze.
So can we line up different vinegars, and can you smell the difference?
Oh, for sure. I have like a really bad sense of smell, but I feel like with vinegars I could.
Yeah.
It's super strong.
But it's rewarding to learn that stuff too, because
Yeah.
you're like, I can do it.
Yeah.
I can do it.
Even I get that way. I'm like,
I don't have
wow.
to file a claim.
Yeah, exactly.
Yeah.
And yeah.
You just
And
feel
that-
useful. I'm like hyper independent, so
Yeah.
like I don't need anybody to help me. I can do it myself. But then I get pissed when I start to mess up. I'm like, somebody help me! So it's kind of a catch-22 with me.
I do the phone a friend thing a lot.
Same.
Hey, so I started doing this, and it
Can
went this
you?
way, and now I'm trying to figure out where to go.
Pivot.
That's nice because we all got cameras in our hands. We can just send pictures.
Just FaceTime. Yeah.
Well, we got a little off topic, but
okay.
kind
I
of,
digress.
not
But
really.
But it all ties back
all
to
circles
back
it
to the
ties
claims.
back to you don't have to file a claim for
Right,
everything.
yeah.
YouTube is a very useful tool. So instead of worrying about the $1,000,
Or you could just Google how expensive are water heaters and not file a claim,
Right.
and you realize
Yeah, people think they're way more expensive
Yeah.
than they are.
Yeah,
They're not
yeah.
that bad. So I've sold a few beachfront condos right on the beach, and they're all having big problems with insurance. And what's happening is their premiums are going up, and so are the HOAs. So a lot of people that I've sold condos for and to, I've represented both buyers and sellers this year. When you're representing the seller, the HOA can kill a deal sometimes because they're saying, well, we don't know. And they shouldn't be saying this. But, you know, it's the agent's job to say these are things that could happen. But if they're
Right.
hearing it from the HOA, it's a lot scarier. And they're saying,
Yeah.
we might get a 50% increase in insurance next year. And so, yes, you're seeing a lot of people sell beachfront condos now because they're afraid of the potential increase.
I actually have a customer from California. She's like, "Why is everybody selling their condos over there?"
Right.
And I told her, I was like, "It probably has something to do with insurance."
Yeah. But it's also that structural integrity
Yeah.
report
Yeah.
that has to be done by 24. Does that affect insurance at all? Or
I haven't seen much about that. So everything affects insurance. I mean,
Right.
I think, you know, the collapse in Miami,
Sure.
that just had everybody freaking out. And we have to, the thing with condo insurance is you don't need as much information. So we don't need like a huge 4-point or any type of inspection. So that I know they're redoing things just in that aspect, but we can still use a wind mitigation report for a condo to insure a condo, and it can still help bring that down. But condos are just, it's actually easier to write a condo policy, but everything's going up.
yeah. Well, the good thing about a condo policy is you just need an HO6.
Right.
Yeah.
Right.
But you're still paying those high HOA fees. So, you know, you're going to pay one
Yeah,
way or the
right,
other.
right.
The master policy is what's going up. So, so I've always just like anybody else, a love-hate relationship with the government. And, you know, back in 2008, they did the whole too big to fail, and they bailed out all these companies that probably shouldn't even have been bailed out. But do we ever see anything like that for insurance companies? Maybe?
What we see is that not anything from the government, but like one company will absorb another company. So their policies will just, you know, somebody will buy somebody out and their policies are going just haywire all over the place. But we haven't seen or don't predict the government to be buying anybody out here. Or, you know, it's just we need new companies coming to Florida altogether. Because once they're done, I mean, there's some companies who will just stop writing business and not go under, but not take new policies and continue to service their older policies. Or just take like very minimal, really easy, you know, no risk homes. But no, I don't think anybody's going to get bought out here anytime soon.
Florida as a whole, are they doing anything to incentivize these companies to come into Florida?
Not that I know of.
No.
Not that I know of. I mean, I don't blame the companies for not wanting to come into
Yeah, I
Florida.
think I just saw something on the news, like in the Orlando area, Geico, they like completely moved out and dropped a bunch of people, and they said that it's just too costly for them to.
I think State Farm just stopped
Maybe
writing.
it was State Farm,
Yeah,
yeah.
State Farm. I haven't heard anything about Geico, but I believe State Farm stopped writing
Maybe
a lot
that's
of their
what it was,
stuff.
but yeah, I
There's
watched
so
it really
many. Honestly,
briefly.
it's hard to keep track of who's writing and who's not writing and who's pulling out and who's staying. It's tough.
Yeah, we're just like a small piece of the puzzle
Yeah.
for them. So
Yeah, it's just terrible.
Yeah.
So, I mean, what have we learned from this? It's very important to have a good, you know, home inspector so you can have a good inspection, a clean 4-point wind mitt, all that stuff.
Yeah, those are super important to have. I think a lot of people think we can get, you know, these quotes and get them out to them without, especially a wind mitigation.
Right.
Like I said, that's going to save you a ton of money. So they're just, ballpark it. I'm like, how am I going to ballpark it?
It's tough, yeah.
I mean, you can, but I'm guessing completely. So it can change, you know, exponentially. But, you know, having your buyers and sellers, or having your buyers get that report to get to us, we can have an accurate number.
Right.
Otherwise, we're going to have it anyways. So
I've sold a lot of new construction this year, and I still tell them to get that. you know,
yeah,
'cause it's
and
gonna
then if
save
you're
them
getting a wind
ton of money.
mitigation,
Yeah.
you might as well get a 4-point while
Right.
you're doing it. You know, have just two birds, one stone.
It's worth the money. It really is.
Yep.
The savings long term are. So you need that. You need an honest insurance broker that's going to be somebody you can trust, somebody we can refer our clients to.
people ask me insurance questions. I'm sure Elliott gets it too, and I'm like, "Here's my list."
Here you go.
Because it's
Make
just
your call.
You
it's
only
tough
know enough to
answer
make
those,
you dangerous.
Yeah, it's tough to answer like the tricky questions.
Yeah, I get asked all the time. What is the previous homeowner paying for homeowners? And I'm like,
You can't even
here's
go by
the number,
that.
but it doesn't matter.
It doesn't
Right.
matter. We have people complain about that all the time.
Yeah.
Well, the previous owner was paying this. I'm like, Yeah, and
Doesn't
they've
matter.
gone up 3 times since then. You know, how long have they been?
Yeah.
Or my neighbor is paying this. My neighbor is paying this. Why is mine so much higher? They could have had their policy for 10 years, and your premium's going to be better if you stay with that company and you're just having the renewal rates rather than reshopping altogether. Because you know they're almost kind of trying to deter people, or people are getting deterred. But yeah, I mean those, and everything changes in insurance. So something today that you're telling people could be completely different 6 months from now, and you're not in the industry, so it's important to get the correct
we're not
information.
It's like
the
anything
expert,
else,
we
like
pass it on.
guidelines
Yeah.
are always
Right,
changing.
completely. I mean, from day to day, they're changing. So definitely send them over our way.
Yeah.
Totally agree. Yeah, don't overstep. You know,
That's what we're here for.
exactly.
Right.
Yeah, that's why.
And
we
we're
have
happy
business
to answer
partners.
questions, because building that relationship is what's going to make them trust us. So absolutely call me, ask questions. We've got a great team. Not even necessarily me, just call an agent and see if they're willing to take the time to answer those questions. Because if they're not, you probably don't want to work with them anyways.
Right.
If they're going to, I mean, obviously they're not going to spend a full day with you, you know, going through every detail of a policy if, you know, you're just going to go over somewhere else. So, but ask the questions, you know.
And then for the other agents watching this, if we're shopping on behalf of the future homeowner, name, property address, date of birth?
Yeah, name, property, address, date of birth, wind mitigation.
Yes.
Those are the big ones.
If we do not have that yet, say it's a house we're looking at, can we kind of tell you what's been done? Will that help?
I mean, unless you know the retrofitting of the roof, then
No.
not really. A lot of people think that making significant changes to the house itself makes a difference. You know, if they put on a new roof, I'm going to save money on my premium. That's not always the case.
Right.
So unless we know, you know, the things on the wind mitigation, your roof to wall attachment, your roof deck attachment, those specific things, and you know, there's ABC 1, 2, 3 under all of them, and they're all circled. We put that in, and it gives the number. So without that, I mean, we know who we can write it with if you give us that information, but not necessarily what the premium's going to be without that wind mitigation.
Good.
Well, thank you so much, Lyndsay. I really appreciate
Thanks
this.
for having me. This was fun.
This was great. I feel like I learned a lot.
Good.
And we'll definitely have you back. And Joel, thank you. Elliott, thank you.
Thanks for having us, Pete.
Yeah.
Wonderful.